Good afternoon, ladies and gentlemen. Thank you very much for attending this panel discussion. The topic of this next panel discussion is South Asia Economic Outlook. And may I just do a quick round of introductions of the esteemed panel members for this discussion. I have with me, to my right, Mr. Rajiv Kumar, Vice Chairman, NITI Aayog, India. Welcome, sir. I have with me Mr. Yuba Khatiwada, the Minister of Finance from Nepal. Welcome, sir. And I also have with me Harsha de Silva, who is the Minister of Economic Reforms and Public Distribution of Sri Lanka. Welcome. Okay, so let's drive straight into this discussion. Given the fact that now officially this cluster, this group of countries, this region has been classified by the Asian Development Bank as the fastest growing region in the world. Mr. Kumar, I want to begin with you, get your opening thoughts. Do you think the potential is still strong given the global backdrop and the run rate and growth for these group of countries can be sustained?
Well, I'm confident that it can be sustained because I think all these countries are still not performing up to their growth potential. And I speak not only for India but also for the other countries because I can see that, for example, Sri Lanka has done far better in the past than what's it doing at the moment, and so can Nepal. And as you know, that in India, we are very focused on raising the growth rate to a higher trajectory actually, and then sustaining it there because we have a fairly ambitious growth target. And given all the work that government has done in the last couple of months, and now today is the RBI's fifth consecutive rate cut, you can see that everything is focused now on accelerating growth further. And we do want to have this growth rate, which will probably end about 6.5 this year, which is lower than what we expect, to go up to 8% sooner rather than later. And I think therefore that South Asia will remain, as it were, the fastest growing region, and and will contribute significantly more to global growth than what it has done in the past.
Mr. De Silva, you agree with those thoughts? Do you believe that with what's happening between the two largest economies in the world, the US and China, and their trade troubles, that the ripple effects would be felt within the region, especially among neighboring countries?
Yes, I think it is for us to, leverage that. There's always opportunities in, every crisis. And for us to do that, we got to change our mindset. We got to be more open. We got to reduce the walls that we have built around Sri Lanka. Unfortunately, like Kumar said, we've been growing faster in the past than we are growing now. We are growing at 3%, which is woefully inadequate for our nation to get to the objectives that we have, set for our people. So the challenge is really to reduce the difficulties around integrating. So bringing down what are called para-tariffs, opening the borders to greater regional integration for us, because we are only 20 million people, a $90 billion economy, and we don't have the problems that some of the bigger countries have. And we are a thriving democracy. So we have all the pieces in place. We just need to put it together. So I am confident that we'll be able to ride the wave in the coming years.
Right, but how does a smaller nation like Nepal tackle the situation, which is really creating a lot of problems for global growth? And there's much talk about downside risks to global growth. At a time like this, a services-oriented economy, which is dependent on tourism revenues as well, largely, and wanting to build those revenues, how do you withstand the pressure there is to the downside?
Thank you very much. Let me just supplement to the two panelists, also with a point of caution, of course. South Asia can grow 6-7% in the medium term because the untapped natural, human, and other resources. But that growth cannot come on its own demand generated domestically. We need to have external demand also, because unless we have a strong middle class and unless there is high drive on consumption and domestic investment, perhaps we need to look beyond the region to see that our growth continues at a high rate in the medium term. So on that, the global environment has a downside risk, particularly as you rightly pointed out, when there are kind of slowdown in the global economy. For countries like ours, who export a lot of workers and bring in remittance, and consumption is driven by remittances, and the economic upstream or slowdown might depend on how we get remittances. And along with tourism, these two factors would be important to see that the growth momentum takes on in the coming years, maybe in the next 4 or 5 years. Other than that, the growing tensions between big countries, which would hamper the overall sentiment, investor sentiment. And that sentiment would also create some kind of problem to smaller economies through several areas, including the foreign exchange market and then the exchange rate.
So let me talk about this big overhang for the world, right? This big risk for the world, which is essentially U.S.-China trade relations, and how they are impacting business sentiment across the region and disrupting supply chains in this part of the world. Mr. Kumar, it's a delicate balance, right, that India needs to strike. In fact, most countries in this part of the world need to strike, because you have to manage your relations with China, you have to manage your relations with the U.S., and while it may turn out to be an opportunity for a lot of the Southeast Asian nations, for a lot of South Asia, and for India in specific, it's still a tightrope walk, because you don't want to rock the boat when it comes to bilaterals at the cost of building your economic cooperation when it comes to this particular aspect, which is essentially taking advantage of the disruption in global supply chains.
Yeah, but I can't see us, rocking the boat, etc., because I think we maintain very good relations, bilateral relations with both the U.S. and China, and the bigger factor is that this stress has caused the global trade growth to go down, and there is a risk at the moment of a kind of synchronized downturn in the global economy, global growth, because the Euro area and the U.S. and Japan and China too is kind of slowing down. So, but there, at least because of our, at the moment, fairly low share in world trade, 1.67% for manufacturing goods and 2.2 overall, including services, we have still a huge scope to expand our external demand and to extend the share of global trade. So, as far as I can make out, we can still take advantage of the global market out there and improve our exports both to China and to the US and to the rest of the world for that matter. And that's going to be a major plank of our growth strategy going forward, and which is why the Prime Minister himself has focused on exports. I haven't heard any other Prime Minister so far in India, including that in his 15th August Independence Day address. That's one part of it. The second part, of course, is that of investment and being able to attract investment. And here I think, with the global chains, value chains now sort of reordering themselves, and the Pearl River Delta now, seeing an exodus, if you like. And it's a pity that Bangladesh is not here with us, because they've taken great advantage of it, along with Vietnam, and gotten growth and investment. I think the same thing would happen to us, and I'm expecting therefore the east coast of India as a big host, as a very major host to investments coming in from China and from East Asia and Southeast Asia, and us connecting very well with them. So I think, I think, just the last word, that the global scenario is not as big a threat. In fact, it still remains an opportunity for South Asia as a whole.
No, it definitely is, which is what I'm trying to understand, that at a political level, you need to balance your relations, you need to manage your bilateral relations across the board. But to what Mr. De Silva had to say, it's an advantage, it's an opportunity still, while you're seeing the reorientation of global supply chains, this import substitution story, trade diversion story coming out of China that countries in the region can benefit from. And in fact, on CNBC.com, we had run a story a few weeks ago talking about how analysts and economy watchers are actually penciling in real numbers on how India can benefit as a national alternative to this trade conflict and this trade disruption. So how do you do that? How do you kind of put yourself in a position? We're talking about an impending deal with the US, which is in the works. What can India do to manage its relations and yet put itself in an advantageous position where it draws in more foreign direct investment?
See, for us, for us, the two relationships between the U.S. and China, I mean, are independent, are themselves important in themselves. There is no sort of a zero-sum game there as far as we're concerned, and it's very possible, and you will see that with our Prime Minister having spent the time in the U.S. and now with the President Xi Jinping coming over in just this month and having a bilateral informal summit, etc. I think we can very easily maintain that, given what we are and given our relationship with the two countries. I think the more important part is that we should now prepare ourselves to be a better destination for the investment, and that's where that's where we need to do our work. To improving our logistics, to improving our infrastructure, to get the trade facilitation right, to be a right destination for the investment which will move out. And I think for both those countries, I think they look at India as a very attractive investment destination. And I think if we can attract export-oriented investment from both these countries, which is a clear possibility, I think India as well as South Asia stands to benefit, and you will see growth picking up in this region in the next few years.
Okay. Mr. De Silva, I'm picking on your word, which is essentially leveraging on this perhaps a trade battle that's on between the two largest economies in the world. It is really front and center to everything that we're talking about in terms of the economic impact on global growth, world growth. How do you leverage it? How does Sri Lanka leverage what's happening right now?
I'll just pick up from where Mr. Kumar left. It's better destination for the FDIs. So that's really what we have to position ourselves. It is a competitive world out there. I mean, if it doesn't come to Sri Lanka, it'll go to Vietnam or it'll go to Myanmar or some other place. So how do we sell ourselves to the opportunity that becomes available? So in terms of Sri Lanka, we are centrally located. We have the great positioning and also our relationship with the rest of South Asia. We don't fight with anyone. Everybody is our friend. And we have, for instance, free trade agreement with India, and we also have one.
Some are closer friends than the other.
Well, India has been our closest friend, and India will remain to be our closest friend.
I have you on record saying that.
Yes, you have me on record in saying that. I mean, we are one family if you really think about it. I mean, where do we come from? Our culture, our religion, everything, right? So it's family, all of us, whether it is Nepal or whether it is.
But Mr. De Silva, then how come all the financing happens from China?
No, that is incorrect. Actually, it's a myth. You can have me on record in saying this also. It's really, it's only about 10% of our outstanding debt stock is to China. Actually, about 45% of what's outstanding is on our international sovereign bonds. And the next is Asian Development Bank at about 15%. Next is Japan at about 11-12%, then China at around 10%, and India is only at around 3%, right? So this narrative is slightly, misplaced. But having said that, we got into a large debt relationship with China soon after the war, because it was during the war that China came in with billions of dollars of military aid when the others were not willing to do so. And then we had lost a good relationship we enjoyed previously with the European Union. The UN human rights brought resolution after resolution against Sri Lanka. And the government at the time, sort of got pushed to China because China had this no interference, quote unquote, position in providing debt. They really don't look at human rights records and things like that. And then soon after the war, what happened was that relationship, the military funding relationship, became an infrastructure funding relationship. Sri Lanka grew at, in real terms, 10-12%, soon after the war. Basically, debt-fueled infrastructure development. We build ports, roads, bridges, etc., etc. And now we got to start paying these back. So that is why even in the Hambantota report, which has been talked about most on this whole example of China debt trap,
Right.
So there are instances, there are examples, there are particular projects, but it would be incorrect to sort of paint it completely as a China debt trap.
But debt is still a key challenge for Sri Lanka, and I'll come to that in a bit.
Sure.
Just hold your thought on that one. Mr. Khatiwada, I do want to address how Nepal is looking at this entire situation. I believe there were some agreements in the works with China a few weeks ago. Are you looking at more trade with China? What are you seeing to happen in terms of strengthening your ties with China in the near future?
Let me just start with the previous point you raised about the trade tensions emerging between big and large economies. As a small open economy having outward-oriented approach, we would see and we would be believing that the frictions are short-lived and the multilateral trading regimes prevail, so that smaller economies also have their space in the global trading system, and we benefit from the growth of larger economies. That would be my take to the previous point you discussed. And then about trade and economic relations with big economies. Of course, we want to benefit from the development of all our advanced economies and also emerging market economies like China and India. So on that, I would say that in several fronts, Nepal has to cooperate, particularly for its long-term financing need. I think South Asia itself is in financing deficit, so it has to meet its financing gap through external financing. So any friction in trade and investment globally would have effect in the region as well in terms of financing, meeting the financing need. And if we are financing our long-term investment through short-term capital inflows, and if there is a turbulent situation, the capital outflows taking place, we'll have some setbacks to the investment we have in the region. So is Nepal. And particularly on the bilateral relations, investment and trade relation, we do have trade relations and investment relations with several countries. And to neighboring countries, and that has to be obviously the maximum. China and India are our two largest investors, FDI-wise, and also bilateral donors to Nepal's development. And India, the major trading partner, with 2/3 of our trade being with India and about 15 to 20% to China. And being middle-income countries, both to a larger scale, we want to benefit from their middle-class population in terms of our market for goods and services. So on that, we are having new agreements on trade and also on payments, which is critical to promote investment as well, and also on some of the infrastructure projects, particularly related to connectivity, road, rail, air, and electricity, including cross-border transmission lines. So that could be critical to also propel growth. The question you had raised before, that can the South Asia keep on growing? The answer is on how fast we can also meet the infrastructure gap by also bringing in more investment from outside the region. And for that, Nepal is looking to both of our neighbors, China and India.
Surely. And you raised a very important point, which is essentially meeting the infrastructure needs of many emerging markets, many high-growth emerging markets, and more importantly, financing those projects. So, Mr. Kumar, let me drill it down to specifics when it comes to India. So we've had this big reform announced just a few weeks ago, this major tax cut, effective rate comes down from 35% to 25%, makes India very competitive in drawing in foreign capital for the long haul. But what about setting up the infrastructure in terms of the land reforms, the labor reforms, electricity, special economic zones, working with the states at the grassroots level to really provide a holistic environment and a very conducive environment for any company from overseas to come out, not just come out here, set up shop, but also be here for the long haul and mean business?
There's one thing which I've always I've heard before, when I used to be the chief economist of the CII, etc., that the experience has always been that once a company is in India, it is there for the long haul. I mean, that's the experience. I mean, in the sense that there is so far has been a higher entry sort of a threshold, as it were. But once you're there, the experience in India has always been very positive. You don't see many exits, as it were. So we are hoping the same would continue. For the rest of it, I think you will see a lot more announcements coming through for ease of doing business, not just the tax, but we are aware the fact that there are issues for logistics, there are issues for energy costs, etc. But those are being tackled at the moment as we speak, and you will see that happening. The NITI Aayog itself is in the business of working with states and trying to get the states to replicate the best practices, whatever that we can discover, and we do rank them now in many areas.
How successful have you been in those conversations?
We have been actually. You will be surprised to see that I mean, we've been fairly successful, and in the sense.
How do you measure that, sir?
How do you measure that is in the sense that if you. How do you measure that? You would see in the sense that how the lower ranked states in terms are they pulling up on their state GDP growth rates, and I think you will see that they're beginning to do that. Industrial activity, investment activity is now spreading across larger parts of the country than just being concentrated in a couple of states. But I think the more important thing to sort of put forward here is that we are now also trying to get the sort of regional cooperation, as it were, going. For example, the latest thing with Bangladesh, the access to the Chittagong port, that is now being, I think, is finalized now, and that will open up the whole northeastern part of the country, and we are getting the highways built there, etc. So that's on the infrastructure fund. What we are looking for and what will happen is long-term financing. From sort of pension funds, from those who are seeking long-term assets, because and for that we have opened the National Investment Infrastructure Fund. We are going to have more such initiatives. We are also doing the asset monetization, which is brownfield investment. So as it were, give on lease already assets which have been constructed. On the land issue, the fact is that there is a law in place, and we are trying to facilitate it. But the more important thing is that we are also considering now acquiring land or use the land that already is there with the public sector to attract investment and FDI, so that their project risk is minimized. As far as on the labor front, that their 2 labor codes have already come out. There are 2 more to come now in the next parliament session. This will greatly simplify the labor scene in India, and will codify all the sort of 200 odd laws that were there. So bottom line is that there is going to be a continued focus and a much sharper focus on improving the investment and business climate in India across the states. The only thing is that we are hoping that more and more states will follow the centre's example, because the action really does take place there. And we are seeing some of that happening already.
What about infrastructure development? And I'm coming back to that same point once again. Because no matter how much money you put behind infrastructure development, whether it's the government, whether it's through the PPP, public-private partnership model, or is it just the private entities coming in and investing, it just doesn't seem enough. And the returns are also not perhaps something that lure investors to say, okay, we are willing to take on this risk. So where do you see the right balance in terms of achieving optimal infrastructure development for India, and at a run rate which commensurates with the overall growth?
See, not enough is of course a matter of scale, and that's what we are, and we can absorb literally trillions of dollars in improving our infrastructure and getting up to scratch to sort of OECD or higher income economy levels, but we are committed to that. And I think what you can see, for example, that in the digital world, in the electricity or on renewable fuels, on highways and on railways, for example, now you have for the first time rail private sector investment being attracted to the railways. You've seen that 7 of the airports have been privatized and handed over. So we are hoping that you will get both domestic and foreign investment being attracted to the infrastructure sector, including housing, because we have liberalized the rules and laws there. So but the demand, but the requirements are so huge that we can continue to grow this, coming to an optimal will be fairly, some time away because of our needs and our requirements. The only thing that I think we want to do now is to attract more long-term funding, and which is where I think to get some more funds like the National Investment Infrastructure Funds would be important.
And I'll link this up to what Mr. De Silva had to say earlier on, but I just have one more follow-up question. A large part of infrastructure financing is debt and less equity, and which has been an area of trouble for Sri Lanka as well. How do you manage the risk that debt comes with at a time when, rates are down, cost of capital is down, so that gives you some leeway, but even so, there's a lot of debt that we are contesting with right now, and a lot of it can become a bit troublesome given the environment, especially if returns don't come in the infrastructure space. So how do you manage the risk that comes in with the debt that is fine?
The last part of the question is more important, which is that the returns in the infrastructure should be made attractive enough, and which is what we can do by reducing the project associated risks in terms of having acquired the land and cutting out all those costs. In terms of the debt, I don't know if you can, our domestic debt to GDP ratio in India is barely 54%, while, for example, in China is nearer 200%, and Korea is about 143%. So there's a huge runway here, not for foreign debt so much, but for the domestic debt. And I think what we can do is to get our banking sector, and which is where now more attention is being paid, because domestic debt to GDP ratio being so low indicates that there is a massive potential left here for the debts to get into the act and the capital markets to get into act. Because that's what we are needing. And there has been a call, for example, now that we want to maybe relook at DFIs. Which is the for sort of infrastructure funding agencies. So I think there is a long runway here available, and given that our savings can go up again, and they were quite high, we expect that the domestic debt would finance infrastructure much more, and they will not. And there's still a long way to go before we think about a debt trap, etc.
Okay, yeah, that's the important aspect. And so, Mr. De Silva, coming back to the point that we were making earlier on what we touched upon earlier on, in fact, is this whole thing about Sri Lanka being stuck in a debt trap. Now, we know that if you were to compare the absolute debt levels, global debt to GDP is, I don't know, it's a really high number. It's perhaps more than 150, 200%. And the fact is that the world is far more indebted today than it was during the global financial crisis. It's just that we have the benefit of lower rates. However, for a country of your size, isn't that a big risk? Doesn't that make you worry a bit more about how you need to manage the financing of these big infrastructure projects that you're taking? Otherwise, you have a situation where the world doubts whether you really have the ability to honor the debt that you're taking.
Absolutely. And see, the dichotomy of what Mr. Kumar said about domestic debt and the foreign debt, and also take the foreign debt, what's concessionary foreign debt and what is non-concessionary foreign debt, and then see what is the ability to repay this non-concessionary foreign debt, essentially a ratio of export revenue. Yes, while I agree that this is an area that we need to be concerned about, we are also trying to shift away from just debt finance infrastructure. If you look at our sort of report for the last few years since we've been in office, we've tried to attract more public-private partnerships, creating space for private sector to play. Even the much talked about Hambantota Port is no longer a government loan as it was at the beginning. It is now a joint venture between the Sri Lanka Port Authority and China Merchants Company. And also, there is a lot for us to learn from India, really. I mean, look at what they've done with airports and, ports. We need to go that route. For instance, Colombo, as you know, is one of the fastest growing ports in the world.
Yeah.
And a port like the CICT port ranks in the top 10 in terms of efficiency and so on. So there has been a interesting success story there, where we brought in private investment and provided the space for these guys to plug and play. So for instance, the eastern container terminal in the Colombo port, which needs to be equipped now, we would like to see participation of large players as opposed to the government really borrowing money and trying to buy those cranes and operate that port. So we are shifting away from the old story to the new story. And we would encourage, India, others to look at positively, look at the opportunities that are, becoming available in Sri Lanka.
Right. For Nepal, Mr. Khatiwada, debt is not such a big issue right now, but you are looking at scaling up tourism revenues, right? And so you would require an environment where you have developed infrastructure. So you would have to invest there. You would have to finance your infrastructure needs. How do you do that in this environment?
Yeah, actually, Nepal is one of the countries having the lowest debt stress. It's less than 30%, including both domestic and foreign debt. But it has a cost. When you are a lowly indebted country, that might have hampered the growth prospect, because with debt, some countries might have got a higher growth path.
And the multiplier effects don't kick in.
And then the major issue is the debt sustainability, how you can finance your debt servicing with exports and other capacity you have. So rather than talking in absolute terms, I would like to talk this in terms of the relative terms, the debt sustainability, debt repayment capacity, and how you have been utilizing debt. That's important. And so far as using debt for infrastructure is concerned, we have limited choice. Mr. Kumar very rightly pointed out on the profitability of the infrastructure projects, the business orientation of the projects. If they are not, it has to be publicly financed and you have to incur debt. But then we have some other instruments in place. Nepal is trying to develop also some other mechanisms of PPP, public-private partnership, where public and private sector can join hands to meet the financing gap in infrastructure. And in some of the projects also going through the instrument of viability gap funding, BGF, that includes. And in some cases also blended financing, putting grants, loan, and private equity in place together so that the project becomes viable. So this could be one of the areas through which Nepal wants to manage its debt sustainability at the level which is comfortable to the countries. But then we have to find out some other areas of our exports, which is tourism, of course. Tourism currently contributes to less than 5% of GDP, despite having a huge potential. But again, even tourism requires a lot of infrastructure, airports, other connectivities, that includes big hotels, and also urban transportation and everything. And in that, we have now the provincial and local governments with federalism coming in place. So we are pulling our resources, the federal governments, provincial governments, and local governments' resources together in some of our priority projects, which includes infrastructure, not only for tourism, but also for commercializing and modernizing agriculture, which is our mainstay, and also to see that industrialization also is supported by the local infrastructure. The issue of land, forest, labor, you raised very rightly, and these are regulatory issues. We have been fixing these regulatory issues along with the macro policies like the taxation policy, foreign exchange policy, and also monetary policy, which have a greater bearing in terms of creating business environment. So this is all about what we have been doing.
The health of the financial sector in India, Mr. Kumar, you've been asked this like, I guess, a zillion times. Where do things stand? I mean, India's bad loan ratio is among the highest in the world. How much more good money will have to be put behind bad to clean up the system?
I hope not much. And I hope that we will, and I hope because, I mean, I'm a taxpayer more than anything else.
That is saying a lot.
And I therefore think that the next, not just think, and I know that it is going to be, the focus will have to be on governance reforms in a very, very major way. And governance reforms in the banking sector, particularly, because I think that's what's needed. We've had several committees, including the PG&I committee, looking into that, and I think the time has come that along with this latest round of recapitalization and mergers, you do make sure that the banks are now governed, managed, and the bank boards, etc., have got the autonomy and the arm's length distance from the government, etc., and I personally, myself, actually have been a votary of privatization of some of the public sector banks, because I think that does make for a better competitive situation in the economy, in the financial sector, because but also at the same time, because it's time that the banks are not the only one to do the heavy lifting. You do need development of the capital markets, where you can get longer term financing for the longer term asset creation that you need, and this is where I think you want to attract the pension funds, etc., into the government. And I think therefore the discussion, at least, I mean, I don't know where it is at the moment, but the discussion at least on the sovereign bonds was also in some sense an apt one to have the discussion, to look at that possibility, because our external debt to GDP ratio is also very low. It's about 22%. Tanvir, just let me take this opportunity to also say that what we need in Asia is also, much higher ambition for our infrastructure development, which could also be sub-regional infrastructure development. I mean, I mentioned the Chittagong port. Once that Chittagong port the access is allowed, and it can be expanded much bigger, and the whole highway construction from Chittagong, I dare say up to Nepal, could be done, and therefore there will be this, and the whole area would undergo a change. Similarly, there has been a conversation in the past about the bridge connecting India and Sri Lanka, and there's been something which one of the prime ministers had actually taken up. So I think that's again something that we want to do. The power export from Nepal, 10,000 megawatts, if not more, has been hanging for a very long time. And if you get that energy export into India, and India has got a huge amount, this is clean energy. And this also leads to flood control. I think those are the areas where we need to now focus on to really, give the growth in the region as a whole, really a leg up. And along with India's own infrastructure development, if all of these things come together with the financial sector reforms that you talked about, which I think are absolutely necessary, I think this region can see a real growth burst, an acceleration which can be sustained for decades, actually.
Sure, and Mr. De Silva also made that point earlier, essentially having more regional cooperation to meet the collective infrastructure needs of the bloc, so to speak. I just want to get a quick update from you, because it was a big issue for the Sri Lankan economy, the unfortunate Easter attacks, that really hit the tourism sector hard, which is again contributing about 5% to the GDP of the Sri Lankan economy. Where do things stand on that front? Because the economy has been fairly resilient from what I understand of the situation right now, and tourism revenues have picked up. After that, you have elections coming in. So what are we seeing in terms of the kind of reforms that will be put in place to really make sure that Sri Lanka, as far as its growth story is concerned, doesn't see any deceleration from here?
Well, it was unfortunate that we had to face that. We lost many lives. We have tried to do our best to compensate those families and get them back on their feet. But going beyond, we have been able to get the tourism numbers back up. It hit a real low. The numbers fell by about 70%. So even though the arrivals have picked up to more than 50% now, the revenue has not still come in because large discounts have been offered and so on. So over a period of time, we hope in less than a year, we should be back in business. But one of the large tourist operators recently said that their Christmas forward bookings were back to 100%. So that's a very positive story. And even though from different network, Quest was in town, and that got a lot of buzz going. We are all working together. I happen to be part of the cabinet committee to revive tourism. We gave moratoriums to every person who's in the industry taken loans for 12 months. We gave them working capital loans. We took off all their levies and duties for a temporary period of time. So we are doing everything we can to revive the industry. And I'm happy to note we are back at number 1 in Lonely Planet. Of course, we got to go better than Lonely Planet.
What's Nepal's ranking? I just had this.
We're back at number 1.
Okay.
We used to be number 1 for a brief period after Easter. We lost that, and we're back. And we are also the best island to visit in the world. We offer an amazing experience. So we are getting back on track.
Okay, that's encouraging to hear. Lonely Planet says Kathmandu is the 5th most visited destination in the world, or is that, well, let me get my numbers right. No, that's ranked Kathmandu at 19th out of 25 best tourism destinations, but is 5th among the top travel destinations in the world. So they have different rankings in different categories. But how do you look at scaling up your tourism revenues? You touched upon it earlier as well. What else do you need to do to make sure that you kind of milk more from tourism?
Let me just pick up 2 points that were discussed before. The financial stability and financial integration in the region, and then the energy. Energy, of course, is the key driver of growth of this region. So we must be having a good trading relation and cross-border transmission lines to share electricity across borders. And that should be relieving us of some of the constraints to our rapid growth. So cooperation on electricity would be the key, and that is the renewable energy, of course. Domestic markets, the financial markets, oftentimes get turbulent, but we can always fix them up. But our regional integration of financial markets is very limited. So unless we reintegrate our financial markets and make our payment systems strong, the benefit of one country growing faster would be very slow to the other countries. So financial integration of the region would be critical to see that all countries in the region grow at least in an agreeable manner. So that would be the issue we should be picking up from this discussion. On tourism, yes, every country have their unique positions to sell to the global tourists. We do have our Mount Everest. We do have the birthplace of Lord Buddha. We have several other things. Kathmandu being the archaeological site, UNESCO heritage site, and we have many things. Unfortunately, some of those sites were destroyed by the earthquake. We have been renovating them. Many of them have been already back to place in the same shape as they were before, but still reconstruction is going on. We hope to do it in a year's time. Then we bring back all the attracted tourists to Kathmandu. But having said that, I would also mention that the year 2020 is our Visit Nepal year. We don't plan for 5 or 6 million now. We are just planning for 2 million tourists next year. And given the size of middle class population across China and India, we don't have to look beyond these 2 countries just to attract 2 million people. So 2 countries are enough. But having said that, we even encourage the European, American, and East Asian tourists to come and visit Nepal for adventurous, for religious, and for some recreational tourism. And that would be one of our areas to trigger our growth and in a sustainable way. And that's the best way to redistribute income also. Because these days you cannot distribute income through your taxation and monetary policies. You have income, richer people can spend, and poorer people work as workers in the tourism industry, and the money goes back to the needy ones. So best way to redistribute income also. This is how we promote tourism in our country.
Sure, surely enough. Mrs.
No, I was just going to make a personal note that my wife and friends were visiting Nepal just last 2 weeks ago to the birthplace of Lord Buddha, so we contributed to yours.
Thank you. So we've heard from Sri Lanka, we've heard from Nepal. Mr. Kumar, India, tourism revenues, what's your sales pitch?
India. I mean, this is it's a unique country, but there is now going to be a big focus on creating some good circuits in India, because that's what we need to do. But let me make a bigger point, sort of larger point, is that the South Asia as a region is quite distant from the sources of tourist originating. So the travel cost is quite high. So there's been a thing for quite some time that if South Asia together could create packages the Buddhist package or the Hindu package or the adventurous package or the sort of or nature package, etc., you'd be very much better off, because then you can get people to come here and then spend more time here.
Why do you need to get people to come here? We are a country of like 1.3 billion. We can
No, but you
service
see,
our
but the point is,
tourists
this
tourism
1.3
sector.
billion people is, it's a myth that I want to bust, because that doesn't represent purchasing power.
Sure.
So we've got 10 million foreign tourists coming to India, and I think Thailand has about 28, and China gets 50. So we do need foreign tourists originating in Europe and US, Latin America, and East Asia. The one figure that I just heard is that the Asian tourist value now is $300 billion. So if South Asia can attract, let's say, 10-20% of that, so we could, because Chinese tourists are now booming away,
It can be a
etc.
major source of revenue.
So the Indo-Pacific region can be one target, but we need to maybe develop now, in some sense, a cooperative manner, the sort of tourist packages here, and I think that will benefit everybody and all the countries here together, and that's what we will be trying. But at the same time, in our case, there are so many things to attract tourists, and I think our tourist potential is very underexplored, and we will do that as you go along. I mean, I think that's, yeah.
You touched upon the whole theme of purchasing power, and I want to bring that up with each one of you, because at the end of the day, we can talk about the broader issues.
Can I pick up one sentence?
Absolutely, Mr. Khatiwada, you can.
From the observations. Actually, South Asian countries also compete and complement to each other in several areas. Tourism is one area where we don't have to compete. We can complement each other through our networking of the major destinations. And this is where we have to work together. And we have a lot of complementarities, and we should work on that to see that the region prospers through tourism. So that would be the point to be taken.
So I'm glad that I sparked off a good thing.
You did. I want your thoughts on the next topic as well. Purchasing power, cost of living, per capita income, living standards in the three countries that each one of you represent. Where do things go from here? Because like I said, we can talk about the broad numbers, the headline numbers, but it really comes down to the specific. It really comes down to the fact, how does the person living in India feel about the living standards in India, likewise in Nepal, and likewise in Sri Lanka?
Each one of us, each one of us needs to double our per capita incomes in the next 5 years and continue to do that for the next 2 decades. And that's the target that we should all have amongst ourselves. And I think we will have that. And I think this is what we want to do. And it sounds ambitious, but it can be done. It's been proven by China that they're able to do that. We've also achieved 9.2% rates of growth for 2 or 3 years between, earlier this year. So we can achieve that. And so, we in NITI Aayog are now in the business of now actually preparing a vision document for 2030.
So India sub $2,000 on per capita right now. Is it a target that you're going to put out in terms of where we can reach?
Yes, of course, and that's part of the target of the $5 trillion economy that the Prime Minister has declared. So, if you just work back, you just do a little arithmetic and you'll see that we will be doubling our per capita income in the next 5 years. Yes, there has been a dip this year, but we are going to try our very best, and I'm sure we'll succeed to up this number so that we get this target going. Okay. And the region as a whole needs to do that for several, 3 or 4 decades.
That's a challenge?
Yeah, Mr. Kumar is right. If you look at Sri Lanka, per capita income at around $4,000, but that really doesn't tell the real story, because purchasing power parity adjusted, we had about some $10,000-12,000. So we have a different issue at hand. How do you create the kind of jobs that are well-paying, and from producing simple products, how do you produce complex products? Otherwise, we are sort of stuck in a middle-income kind of trap. So our challenge is slightly different to what we used to face, say, 5 years, 10 years ago. And talking about the region growing together, I really appreciate what Mr. Khatiwada said about complementing. Now, even in the case of energy, I think Nepal has about 40,000 megawatts of possible, economically feasible, run of the river, hydro generation capacity. So how can we participate in sort of regional, grids, for instance? What is blocking us from doing that? Mr. Kumar talked about building a bridge, between India and Sri Lanka. So why are these things not happening? What about visa regimes? We got to be able to sort of reduce the political tension in this region, right? If we can do that, then I'm sure that we can do more together, because there are complementarities. We'll give you the beaches, he'll give you the mountains, and he'll give us the culture, right? And then that's a package, right? But for even to travel between these countries becomes so difficult. How difficult is it to come from Kathmandu to Colombo? Or how difficult is it to go from Delhi to Karachi, for instance? So connectivity we have to really work together on this, and also better financial integration. How do we benefit from it? And none of us will lose. We can only prosper, because note, this region is the least integrated region in the world, right? Least integrated region in the world. Welcome.
Would you like to join us on stage? 5 minutes to go, sir. Okay, never mind. But I would just want your thoughts, Mr. Khatiwada, on this aspect as well. Since we're talking about it. I do want you to address the question of cost of living in Nepal, because 65% of your population is working for the agricultural sector, which is a key contributor to your GDP.
Yeah, that could be one of the sectors to propel our growth to double-digit level in the next 5 years' time. That's what we expect. If you have high growth path in the next 5 years, all countries in the region will move to middle income class, and then we might fall in middle income trap. Mr. De Silva, you rightly pointed out. But it's better to fall in middle income trap than falling in the poverty trap. No, we don't.
We're not falling in a middle income
we are not falling, but even if we fall, it's better to fall in middle income trap than falling in the poverty trap. That was my point. Currently, many of our economies are still in poverty trap. So we just want to get out of the poverty trap and see how we can also avoid or escape the kind of traps that might arise in that process. And I think South Asia is even poised to avoid that kind of trap that we might have. So it's not a big question, but about the cost of living, which is measured through inflation or others. I think South Asia has very benign inflation. It's about 5% on an average, which is not bad. Maybe Sri Lanka a little bit higher, but in other countries, it's not a major problem. Provided that we have good food supplies, and food prices are the key determinants of inflation in countries like ours. And when we have good rain or monsoon, that we call, we do have good crops, and then we have good supplies, and we keep the inflation low, the food price inflation. But then we have to see how the international commodity prices move to see the cost of living going up or down, the petroleum prices, the big trade tensions, some kind of tensions in the Middle East, in the countries having oil producing. So we have to see how oil prices goes and commodity prices go. That would also determine some of our cost of living. So let's see how we can moderate those international prices.
If I may just come in here on that issue, for instance, India has put either a ban or heavy restrictions on the export of onions, for instance, in the last few weeks. And perhaps you may not realize it, but small countries like ours have major impact in prices of, I just want to bring it up. And for instance, export of tea to India. We would like to see, barriers brought down, sort of quotas removed. I mean, these things we don't need to compete. We can complement and collaborate. So the trade barriers, restrictions among our countries in this region seriously must be brought down, because we can talk.
I couldn't agree more. I would agree completely.
And we've initiated that dialogue here between the two of you.
Well,
maybe bring out a list of items.
Overall, true. I think it's important that South Asia as a region advocates and follows open economic policies and open trade policies, because I think that's the key for us going forward. And this particular fact of us being the least integrated region in the world has to be changed. But it's not so easy given where our geopolitics. But nonetheless, we must work towards far more open economic borders than we have today.
So suffice to say, as we conclude this discussion, and as I thank all three of you for being part of this panel discussion, the region needs to be open and more collaborative to sustain the tag of being the fastest growing region in the world. Thank you very much.
Thank you.
Thank you.